I'm going to share with you the top 3 things that improved my trading over the years. And when I say over the years, I mean over the last 27 years since I opened my account on E-Trade in 1996. And if I had known these 3 things in 1996, instead of stumbling upon them over the years, I'd be filming this video from my multi-billion-dollar private island somewhere. So the first one, I'm going to call this letting the charts find me, or letting the technicals lead to the fundamentals. So what I do is I flip it. I think what I did for many, many years, and what I think many investors do, is they try to figure out what the next hot stock is going to be. They figure out the hot, they've read the William O'Neill quote, "Find stocks that disrupt the way we live, work, and play." And so they look for the next big disruptor. For example, I remember the online gaming craze, when online gaming stocks were bursting on the scene, and we were trying to figure out what the best online gaming stock was. Or 3D printing. We were going to 3D print our livers and our toys and our houses and our cars. And we were trying, at least I was trying to find the 3D printing stock that was going to go up 1000x. And then recently was the AI movement, right? We tried to figure out via fundamental research which of the 50 AI companies are going to change the world and change our bank accounts. When in reality, it's so much easier and effective to find strong charts and then look at the fundamentals and then decide, okay, is this a 10 or 15% swing trade, or is this something that I should try to hold for a bigger move? And how, because the problem is, even if you find a stock via fundamental analysis that has great fundamentals, that is in a hot industry, etc., you got to wait for the market to figure out you're so smart. That is, to figure out what a great company it is. And sometimes this takes weeks or months or years. Sometimes it doesn't happen at all. So instead, what I do now is I find strong charts. I do it mainly through running screens. You'll have to find some screening software. The easiest thing to do is just to run a screen that shows you the top 10% of performing stocks. That is, the stocks with the relative strength of 90% or higher, outperforming 90% of the market. And then you look at the charts. If the chart looks like it'll be buyable soon, then do your fundamental research. Figure out, why is that stock so strong? Is this a company that's going to change the world? If you want to, you can add some parameters. I know, I have MarketSmith, and you can add a certain amount of revenue increase per quarter, a certain amount of EPS, etc. But honestly, the relative strength screen alone will get you most of those great stocks. And then you can compile just lists of charts. I have chart lists on stockcharts.com. I've got a list of 1,000 charts, and I can just scroll through those 3 seconds per chart and wait for the strong charts to jump out at me. That's number one. And I'm telling you, that has saved me so much time, and my investing has been so much more successful now that I've flipped it by identifying strong charts first and then looking at the fundamentals. Okay, number 2, this is progressive exposure. I learned this from Mark Minervini. I think many beginner and maybe expert traders alike, they trade one particular size. They always trade in $1,000 blocks or $5,000 blocks or 1,000 shares or 100 shares or what have you. But in reality, we need to be, regarding position size, way more, we need to be extremely dynamic and ever-changing. Minervini uses an analogy of city traffic. When there's no traffic, you punch it, right? When you're crawling your way through complicated traffic, you got to go slow. Similarly, when the market is poor, we reduce our size until we're trading really tiny pilot size purchases. And conversely, when the market's hot, then we are trading a small number of stocks with very big positions. And so we change our position size progressively depending on the quality of the market, but most specifically our own trading. If your last three trades have gone great, then you dynamically increase the size. If you have gotten stopped out 3 times in a row, don't put on the same position size on your fourth trade. Make that trade smaller. That's number 2. The third one, which is a more common one, everybody knows about this, but I think many of us still are not doing this, and that is stop losses. Using automated stops or alerts to take us out of stocks at a small loss. And this, for me, I learned this from William O'Neill, who recommended 8% stop loss or less. As I've gotten better and studied Mark Minervini more, my average has been about 5%, but I generally don't do an arbitrary 5% stop loss. I look at support, and then I often do a staggered stop, like 5 and 10 to give me a 7.5 average, or 4 and 8, that sort of thing. So using stops, honestly, it sucks much of the time, because the price comes down, hits your stop, takes you out, and then the stock keeps going. But so 2 things. 1, if that's happening over and over again, that's telling you valuable information. That's telling you that either your entry points are flawed or the market's lousy. In either case, you shouldn't be trading until the conditions are better or until you get better at being precise with entry points. And 2, stop losses are really painful until they're not. The first time you get stopped out for a 5% loss, and then over the next week, that stock goes down 50 or 60 or 70%, then you'll get it. Then you'll understand why we use stop losses. Or more likely, what's going to happen is you've gotten away without using stop losses for quite a while. You put on a big position, and it goes down 5%, then 10%, then 15%, then 20%. And after about 50 sleepless nights, you're sitting on what was your big position. It's now at an 80% loss. We avoid all of that by taking necessary paper cuts at times by using the stop loss. So there you have it. Letting the charts find me, or letting the technicals lead the fundamentals, progressive exposure, and setting stops. That's it. Let me know your thoughts and comments. I have a Patreon page where I show my current portfolio every weekend and my focus list, and I do a couple blog posts during the week. There's a link to that in the description below. 7-day free trial. And secondly, when I do fundamental I can't talk anymore. When I do fundamental analysis, the main area that I use, the main website I use, is Seeking Alpha. I have the premium version. I can access transcripts, news, fundamental data, and read analyst articles. It's a real treasure trove. There's a link for that in the description below as well. Let me know your thoughts on those. And then if you have additional breakthrough ideas or strategies that revolutionized your trading, that improved your trading tremendously, let me know in the comments. I would be interested in learning from you guys. Thanks.